Check. Stephen Sargeant live from Money 2020. We are live here, airdropped with the Around the Coin podcast. The first time the Around the Coin podcast has been featured at Money 2020. Shout out our guy Ian Horn, setting this all up for us, and the amazing people at the Money 2020 organization that allowed us to come and talk to Clarisse from Dfns, all about cybersecurity, custody, MPC. We're gonna talk a lot about the new partnership that they have with IBM and what play IBM has coming into the digital asset space, especially for large financial institutions. And who better to do it with such a strong team when it comes to cybersecurity, technical complexities, and just efficient wallet-as-a-service infrastructure in Dfns. I'm excited to get all the juice from Clarisse about what is happening with that partnership. We have 25 minutes in the booth. We're gonna talk about everything. This is your host, Stephen Sargeant, live from Money 2020. We have the Around the Coin podcast, and we are in the honeypot. We have the one and only Clarisse, the founder and CEO of Dfns. Clarisse, this is our second startup time. Give us the 3-minute intro. Tell us all about you and how you got into this cybersecurity / custody / MPC space.
It's always a pleasure to talk to you first. So thank you for taking the time again to spend time with me. I started discovering blockchain technology when I was a banker. So I spent about 10 years in banking, different roles. And first we looked at the technology to enhance the processes, mostly in trade finance. At the time, 2014, too early. People didn't really look at it. 2 years later, because I really thought that this technology was interesting, I started actually diving down and reading some white papers. And that's when typically there's a moment in a founder's life. It's before reading a white paper and after in the blockchain space. And then your brain explodes and you're like, all right, I have no choice. I need to commit to this. And I started building a company, which was a cross-border payment company between the US and Mexico. At the time I was in New York. Was very hard to build anything in 2015, 2016. Ethereum was barely out, right? So it was very much the early days. And so put the project aside, didn't resign from my banking job. And 3 years later, I had the chance to work for a company that was incubated by the bank. They were raising an ICO. Crypto trading had never been my core focus, but I thought, okay, they have a cool project, infrastructure project. Let's go and see institutional investors and see what they think about it. Is the institutional finance ready to start looking at the technology? To my surprise, everyone was very welcoming, understanding, the magnitude of it, and so they would, naturally fall into, okay, we'll buy some of these tokens. But the process of buying the token was extremely difficult. It will go at, you need to buy a ledger, learn how to safekeep a private key, et cetera, et cetera. And people will be like, okay, never mind, we're not that interested. And so what was very interesting in the feedback that I got was, we need to run this crypto investment the same way we're running our traditional investment. There's no reason why we're going to start, making some exceptions to our internal policies. We don't want a trader to leave with that ledger in his pocket and suddenly just go away with our money, right? And so at that time, I kind of looked at the entire spectrum of the custody space. Another interesting part is that the line were very blurry of the financial services and versus the tech providers. But mostly what was interesting to me is that after that sort of global benchmark, what I witnessed was that what was available were solutions for the buy-side market, right? So very much crypto trading related. And my interest was to use that technology to build, many different applications, financial services, mostly for the traditional finance. So I resigned, started building Dfns with in mind the traditional finance adoption, which took about 3 years to actually come. But yeah, that's pretty much the origin and my founder story.
And we're seeing a lot more traditional financial institution players here at Money 2020 than I think we've seen in the past. Even at traditional crypto companies and traditional crypto conferences, the traditional financial institutions are here. They're impacting. They're really getting a grasp of digital assets. If you were to go on stage today and talk about, the current state of cybersecurity, custody, and wallet-as-a-service infrastructure, what would be one key message you'd want the traditional institutions to take away with them?
There were several phases in the traditional finance adoption. First, this technology was used as, or was leveraged by innovation department that were looking to build POCs. So at that moment, obviously security is important, but that's not what you're looking at. You're looking internally to prove that there's a use case and you're going to build a POC. Now that we're seeing more and more actually large production use cases, and now that the business line, cash management, payments, capital markets are wanted to build the setup for their the infrastructure of their finance to evolve for the next 10 to 20 years, the subject becomes core, right? So at the heart of it is the standards for digital assets shouldn't be lesser than the one for traditional finance, right? And this is what we've been keeping on repeating. You should not do things less well with crypto because it's a new technology. You should actually maybe even have better technology and come to the market with the latest not only trends. I don't like that word, but the latest good practice that have been accumulating over the past 30 years. So security is of the utmost importance because otherwise we're going to spend our life doing one path forward, two paths backwards. And I think for the first 3 years of our business, we've been a lot impacted by the crypto trading markets. And there we've seen a lot of rogue behaviors, right? People that were treating this space with as if pretty much sending a Bitcoin should be as easy as sending an email. It's not. This is money, and you should actually make sure that you fence it properly and you secure it properly. So we spend our time to say there's several risks and new risks in blockchain. Those risks are harder to get, and you should get educated. So, for instance, smart contracts. How do you secure a smart contract? Who audits your smart contract? These are very specific risks to the blockchain industry. But what's fundamental is that your corporate security is actually exactly as important as it was in the traditional finance. And you should not lesser that part, right? And when you look at the history of hacks, for instance, the Bybit hack, all that would have been prevented by good corporate security practice. So we try to break it down and to say, okay, first you start by making sure that you operate with corporate security practice that are, best in class. Second, you audit the platform that you are going to integrate. And audit means, are they certified? What technology are they using? It should be transparent. If a vendor doesn't open the due diligence term for you and to ensure their pen test and their certification and the SOC 2 report, etc., is that something is probably wrong, right?
Do you think we lost a little bit of that because we were so focused on disrupting the traditional financial institutions that we forgot to take away the best practices, and what they've done well over the last 5 to 10 decades is good security and cybersecurity measures? We kind of threw away everything, and then we forgot about the cybersecurity part that we should have kept in place.
100%. The first wave of and not all the builders, obviously, not all the companies, but the first wave of adopters on the crypto side completely reinvented the wheel, right? And thought that they were starting ground zero. No, we're not starting ground zero. We're starting of a history and a sedimentation of, once again, security practices, compliance practices that cannot be forgotten. 100%.
What is the biggest use case? What are your traditional customers? What are they commonly doing using your platform and wallet as a service? As a wallet as a service provider, especially one that's API first, which we don't see too many of those in this crypto industry.
Yeah, we serve several use cases. We mostly focus on two. The first one is custody for mostly banks, neobanks, crypto custodian, regulated crypto custodian. The use case behind that is mostly being able to, for a bank, being able to serve the asset managers that they've been serving, the asset managers that are issuing the ETF. They can hold the Bitcoin associated. So they want to gain back that business, which has been completely taken away from them from the Coinbase of this world, the Anchorage of this world. We are the only, thanks to them, they were the only regulated providers out there who could do that. And so you see a lot of use case on the custody side, very, very basic use case, which is at the foundation layer of the finance industry. And the second is payments. And payment, we've been very exposed to the payment use case because, as you were saying, being an API first platform, actually the first client that ever built on Dfns, they were payment platform, cross-border platform, etc. So our the first client still alive, actually, that signed up on Dfns is a company called Nilos, who's doing cross-border between Europe and Africa, Europe and Latam. And then we were very lucky to also scale with players like Bridge before they got acquired by Stripe. We're still also behind Stripe, MoonPay, WalletPay, Keyrails, you name it. This is definitely a place where we see a lot of activity on our platform. We process around 3 billion these days of volume on the platform, and I would say 70% is stablecoin related. So we're very much exposed to pure TradFi use case. And if you want to drill down on the sub use case, what are they actually building? Number one use case is cross-border. Second, we see a lot of remittance, mostly on our side, mostly serving cross-border between the US and Latin America. And last, which is growing, is the global payroll use case. That's mostly what we see. Apart from that, we also serve a tokenization use case, a bit of trading where you need automation, right? But today our core focus is very much on the first two ones.
You mentioned a few companies there, obviously, as a infrastructure play. You partnerships and integrations is huge for your organization. We just heard yesterday about the partnership with IBM. I feel IBM's kind of been quiet in the digital asset game. It seems like they're ready to make a big splash. Talk to me about where IBM fits into this digital assets for traditional financial institutions play.
Yeah, of course. Main clients of IBM are banks, right? Banks right now, especially in the US. So depending on the market, you have a lot of activity in the US, in Europe, in Turkey, and some specific markets. Banks are looking at the digital asset space, knowing that they have to do something, and knowing that they need to start deploying their infrastructure to be able to support blockchain-powered finance, right? IBM today process, or let's put it this way, 70% of traditional finance transaction hit a mainframe or a piece of IBM infrastructure at some point. And I think when you look at the credit card processing, it's about 95% of credit card processing that goes through hardware, an IBM piece of a hardware piece on the IBM side. So they play a fundamental role on the traditional finance. So think about it. When you're IBM and you're starting seeing digital assets, the digital assets market actually growing, banks starting thinking about issuing stablecoin, tokenizing deposits, getting into the space. Being able to serve these clients with a digital asset offering is essential. And that's the way you become relevant 20 years from now. And I think what we thought was amazing when we met the IBM team, or when we first met the IBM team, is that they were very early on in understanding that path. They had actually partnered up with other wallet provider in the past to be able to supply key management service to these banks. And they decided earlier this year they wanted to have a strategy there and to be able to, be the first service provider for the finance industry to be able to have a digital asset platform to serve these clients. It's absolutely game-changing, and we're very, very happy about that, because put yourself in the shoes of a bank. Before IBM gets in the game, you have in front of you a bunch of startups. Some bigger than others. I'll give you that. But still, there are players that have been around for 5 years. Starting digital assets for a bank, it means opening your infrastructure, opening the infrastructure that is already legacy and where you're actually operating all your traditional transaction, to a new vendor that you don't know. So you need to start benchmarking them, building trust, going through the procurement. And you know what? If something goes wrong, it's your fault.
Hoping that they'll be around in the next,
exactly
bull or bear market.
Exactly, that they don't get acquired. And that saying that no one gets fired for choosing IBM? Well, that's very true. No one gets fired for choosing IBM. And so we've been starting doing the first meetings, the joint meetings with them, and I've been amazed. Honestly, it was behind my expectation to see how those innovators at bank are completely, they're released, right? It's finally they have a solution that they can actually push internally without having to gamble with their profession. So this is good, and this is I think where we're super happy as well is that this is a major step for the adoption of the technology at scale for the traditional finance space.
I think it's so interesting. I had no idea about those stats, but I also didn't know about the stats about Dfns. $30 billion in assets under management or that are covered. You have 3 billion transfers worth of values on a monthly basis.
Yeah.
How do you protect your,
Yeah.
I hate to use this analogy, but you're a honeypot
Fair enough.
for illicit actors, especially nation state sponsored actors. How do you protect your users' funds and the partnerships with IBM that rely on this technological infrastructure?
Yeah, of course. When you look at our technology, at the fundamental, a wallet is a key and a node, or actually a couple of key, private public key and a node. Without the node, you cannot transact on chain, right? So this is very much how we see the wallets on the blockchain space. And in between, we've built a stack that enable developers to easily access those 45 blockchains today. But we keep on adding blockchain every month. And we enable them as well to safely connect with third-party integrations, because once you actually have an asset in a wallet, you want this asset to move, right? You want this asset to be able to generate yield. You want to be able to operate not just the security of your wallet and the custody of your wallet in a safe way, but the entire life cycle of the transaction. So on our side, when you actually operate, or when you actually start being a client of our SaaS platform, we leverage what we call multi-party computation, so MPC technology, to generate the wallet, and that's going to be that fundamental security layer. We can spend hours, and I think they're going to kick us out. We can spend hours on MPC. I think the one property that is interesting for everybody to understand is that when you leverage multi-party computation, you generate a key in shares, and you never rebuild that key, even at the point of signature. So you remove the single point of failure in the life cycle of that private key, and that's amazing. Honestly, this is why we chose that technology to power our SaaS platform, and this is why we think that it's a very strong technology for the specific use case of digital assets. We've decided to open source our technology, so it's actually transparent, so everyone can look at it. It's audited, it's coded in Rust, it's open source through the Linux Foundation. For us, that has always been operating in transparency has always been something that is super important. That's the fundamental layer. And then on top of that, right, because you can have the most secure key infrastructure, key management system, if your integrations are loose, if you don't connect your third-party, your staking infrastructure directly into your core MPC infrastructure, then you may pretty much build a castle with open doors, right? So then after, I would say around that, there's many layers of security that we implement. Just want to add something here, is that this is our SaaS platform, but what we've recognized over time is the larger players, the banks, they've operated KMS forever, right? Actually, they are the ones that have standardized the previous technology that is still very much in place everywhere in the bank, which are HSMs. HSM has been standardized since 1970s. It's a technology that they've operated with. They have hundreds of HSMs that are managed. And so these players, the larger players, they don't want our MPC technology. They're telling us, go get it standardized. Maybe we'll look at it later. But they want to operate the KMS based on the infrastructure that they already have today, right? And so it's a very different concept, a very different motion. Young providers, they want you to take care of it. Banks are like, all right, that part will take care of it. Integrate safely your technology and your software on top of this KMS.
You're having conversations with some of the titans of industry when it comes to traditional finance. How complex are these concepts to them? How do you educate them?
Yeah.
Because I find in crypto, people just bucket everything. Like, oh, you do crypto compliance, you're Chainalysis, right? Like you do what Chainalysis does. But there's so many, different competitors and industry players that handle unique aspects of cybersecurity, of MPC. How do you acknowledge where you fit into this whole puzzle?
And it's also evolving, right? We're all evolving with the industry scaling. Education is key. You absolutely mentioned it. And I think there's several levels at which the players are today. So most of the tier one bank, they understand the concept. They've been educating themselves. They've been doing POCs. So they've building competence internally with innovation team that have been following carefully the subject. So these players, they understand the market. They've sometimes done some of the RFP. So the concept is not too foreign to them. All the new players that are coming to the space, then it's long hours of education. But we always start, or we try to start with kind of simple concept, right? Which is, if you are going to have any use case being deployed on blockchain, you need a wallet. And that kind of layer of basic infrastructure, you need to implement it for any use case. And it's completely use case, I would say use case neutral. It's not completely true because you can decide to have some different type of storage, cold versus hot, depending on the use case you have. So it's not completely true, but it does hold the fact that this is kind of the foundational layer for all your use cases, right? And from there, we try to always discuss every single subject based on the use case. And we really think that your technological stack should be extremely use case focused. And this is why, for instance, we're extremely, we have a platform that is extremely modular and we're agnostic in terms of integration because we don't believe that it is our position to tell you you should leverage public blockchains instead of private blockchain. We don't believe that this is for us to be to build a product with some sort of ideology. We want to build the most open platforms. So actually, the technology and the combination of third-party integration they will pick is relevant to their regulatory requirements, to the use case, to their clients, and it can be very detailed. The reason why, for instance, we started integrating content network very early on 2 years ago is because clients came to us being like, we actually need this technology to start tokenizing assets in a privacy preserving way, right? So we listen to our clients, we build up, and then after, you're right, it's about educating very specifically to the use case they want to address.
And Canton's huge right now. They're getting a lot of popularity. 30 seconds, what does the future of Web3 look like within cybersecurity and wallet-as-a-service provider?
So you mean from an industry standpoint?
Yeah, what does the future look like? What do we have to do to see this vision that you thought about years ago when you built?
So first, from a market standpoint, I believe there's going to be a lot of consolidation and there's going to be a few large players that will remain and grow. We'll see also players specializing in use case to be very competent. On our side, our vision is that what we're building is so central to the infrastructure of our clients that we're focusing less and less on the key management part and more on the operating system. And for us, the future is in building this marketplace of integration, this nexus for your blockchain operation system that is safe, so you can actually, never leave the enclave of that security that we promised you to start with, right? So it's going beyond the wallet up until the application. So we make sure that the life cycle of the transaction is secure from A to Z. And this is very much how we're expanding in our product, right? At every single stage of the life cycle of the transaction, how do we prove our clients that, it's been initiated by the right person? How would we keep this cryptographic audit log? And how do we prove that security from A to Z? Yeah. More transparency, more standardization, 100%.
Clarisse, Dfns, the first Around the Coin podcast live at Money 2020. We're so happy to have you here. And we hope that we could do more, maybe around the world, maybe in Amsterdam.
Would love that. Thank you so much. Thank you.